Live streaming is on.
All right. Good afternoon, everybody. Gavin McGuire, event trader here, keeping an eye out on the markets too. We talked about that little pop that we got. Again, not really seeing any headlines related to it, so we'll be watching that. Obviously, keeping an eye out on the Apple headlines too as they cross. So far, the majority that I've seen over the last couple minutes have been about the Apple Watch Series 9, but nothing that I would consider to be a market mover. So definitely got our eyes on this action. Also, the bond auction just came out too. It was a decent auction, but again, I don't see that as the catalyst. So we'll be paying attention to that. And the other person that will be joining me, of course, on the options playbook, and we'll get a little commentary from him on the market, is Brandon Mars, options trader, who has been doing a really nice job for the subs out there, putting forth some pretty good trades. So, Brandon, how are you doing today, my friend?
Doing pretty well. How about yourself, Gavin?
No complaints, no complaints. Just kind of watching this market chop around, which, if I had a dollar for every time I've heard the word chop in the last 2 to 3 weeks, I think I could be retired from this business. So I'd ask you, what are you seeing out there in the markets? Is there anything that's popping out to you?
Yeah, I'd kind of agree with you on that chop comment. I mean, there's definitely been some nice trades out there. There definitely has been some nice moves here and there. Kind of, envisioning them sometimes, I guess, has been a little tricky, and I think some of the games have been a little elevated. So it's been a little frustrating, and it's part of trading. Been doing this a while. I know you have too. I mean, it's just a part of the game. But for anyone who's new to trading out there, if you're getting frustrated, I hear you. That's for sure. So yeah, just trying to keep the head above water, maybe be a little bit more selective with the trades. I said in my morning notes today. I don't know if you take a quick glance at the charts, and by that I mean the S&P and the Nasdaq. I mean they kind of look like they're maybe going to take a run at the highs from July. But at the same time, we do have that seasonality of September being the weakest month, generally speaking, for stocks, and we have some of the potential landmines out there. More inflation reports, rising rates, all that stuff. So an interesting little mix to keep us on our toes right now.
Let me ask you, Brandon. So, when we get into an environment like this, how do you change your trading? Is there anything special you do, or is it pretty much just try to kind of roll back, smaller size type thing?
Yeah, I mean, maybe not necessarily smaller size for me sometimes. I think it's more just being a little bit more selective. And, we talked about the same thing a couple weeks ago. Maybe not trading in the first 30 minutes, letting the market just kind of, settle a little bit. I think today's a perfect example. If you didn't do a trade until when did we start getting that market move? 11-ish, when we started climbing back up. If you're just kind of taking your time, enjoyed your coffee, watched the charts, and checked out some of the setups, you could find some nice intraday swings there, and you didn't have to rush, at 9:30 where we got that morning rug pull around 10 o'clock. So for me, I think it's just kind of being more selective and patient, really.
Do you have any? I know you said just kind of letting the first 30 minutes play out. I know I'm in the same boat, especially if there's a big econ data point coming out at 10 a.m. I don't really see the need to try to guess direction in front of what could be a potential sentiment trader. Um, is there a time where you just kind of throw in the towel and be like, today's just not the day to trade? Or, is there a certain time period, say closer to lunch or around the European close, that you find a little bit more advantageous opening up?
There is this little voice inside of my head that says don't trade, but I don't know. I just seem to always touch that hot stove. So,
It's tough not to, right?
it is. And, I'm pretty well glued to my computer most of the time during the trading hours just to monitor any open positions that I might have thrown out there. So, you see things that you like, and it's kind of tough sometimes to not take those. Um, But I think for me, like I've had days lately where I've looked at the end of the day and maybe it's not zero trades. I didn't completely throw it away, but maybe I've only done 2 trades. And for me, that I think is pretty disciplined. So I can't remember the last time well, actually no, there was one recently where I didn't have any trades at all. I couldn't wrap my head around things. Things were annoying me, and I just didn't want to use too much brain power. But generally speaking, there's always going to be at least 1 to 2 trades.
All right. Let's talk about some of the trades that you have out there then at the moment. Um, See, I know you got your Lulu on. You just bought some NVDA calls and you closed out Disney. So why don't we start here with Lulu since you've had that one on the longest and you're still involved in that trade. What are you seeing in that Lulu trade? Is there anything in particular that's making you nervous, or you got some targets laid out? What's your plan for Lulu?
Yeah, so Lulu, we've talked about this a couple times a few weeks back. One of my favorite post earnings setups. So you get that nice big move higher, the gap up, very little wick at the top of the candle, and this is from September 1st on the daily chart. And then, over the last 6 trading days or so, you've basically got a flag formation that's formed. So had this on yesterday. Got a real nice move off the lows of the day, and almost up to the 400 area. I was a little surprised it didn't quite test 400 yesterday. So I was able to roll up the options to lock in some of the gains, and unfortunately this morning had a little bit of a move down and then a real nice move higher, and it just kind of started consolidating under that 400 level. And the market was looking like it was going to recover. I thought we were going to get a little push higher to the highs of the flag pattern around the 404 area, but really just got a quick fade, unfortunately. So obviously hurt my option, and that's one of the reasons that I roll, and we'll go into that a little bit further in this one in particular. But I'm actually kind of liking it even more as, kind of another day to the flag pattern. And it seems like they're trying to accumulate shares, underneath the surface, as I say this. So I'm not ditching it yet. If it were to maybe fall below the 390 area, I'd get a little bit more nervous, but I still like this trade, and it's a pretty strong chart overall.
All right. So your target then would be what, 407? That range you thinking, or do you think it could get up that higher?
So my plan of attack with that one is to, if it can get up back above the 400 level, to see what it does around like the 404-ish area. That might be an area where I might cut and run depending on what the market's looking like. And then if it got through that, yes, then exactly 407, I would say, would be the next target level.
All right. So we'll keep an eye out on that. What would have you throwing in the towel on this one, Brandon?
I think the main thing is, if you look at on that daily chart that you just had up, you had that big candle there post earnings. If it were to move below maybe that open, that might raise some red flags, but probably more like the 390 area. And with something like this too, you got to kind of be careful. We talked about this a few times. You got a nice flag pattern there. You've got 6 straight inside days. If they dip this thing down to, the 391 area, that could very well be a head fake to scare people. So you got to kind of watch that on a setup like this.
All right. So keep an eye out for that head fake. So basically 390 then. I mean, like you said, if it falls below 393, that's when it goes on the warning radar, I suppose. And then you're just going to kind of follow the price action from there to see if you think it's going to be a shakeout or not. Is that kind of the plan?
Exactly. Yep.
Yeah. What would have you thinking it's a shakeout?
If we all of a sudden kind of saw like a long wick on some high volume, if all of a sudden you saw that like large capitulation bar on high volume, followed by a reversal type candle like a hammer on high volume. That would make me think they were just trying to shake things out before finally letting it march higher.
All right. Moving on, NVIDIA, a name that you've done quite well in. You bought some calls today, obviously coming in to test its 50-day moving average. Here broke below the 20-day moving average. So, what are you looking for out of NVIDIA?
Yeah, so Nvidia, I mean, it's had a nice little pullback from that high. I mean, I'd say it's weak, but not really, I guess. Over the last week or so, it has been. And I think it's just kind of getting a little closer to where they're gonna maybe start letting it go higher. And today I just kind of saw some interesting buying activity. Again, I've been watching this thing real time for pretty closely for the last week or so, and it just looks like they keep accumulating shares, and eventually they let things go. And with the Apple event today, you never knew if they all of a sudden were gonna, rekindle the AI tech animal spirits or whatever. So, I just kind of thought it might be an interesting play to have on, and I like the price action. I think just still even right now, I think they're just trying to grab shares on it, and that's a tough game to play sometimes with options, because the longer you sit in it, the more your premiums get chopped around. But I'm sticking with it. I feel like one of these moments it's going to take off as it kind of keeps grinding higher on the day.
All right. Any targets or levels that would raise a red flag for you here on NVIDIA?
Yeah, so on the upside, I'm hoping for a move up to the 20-day. I have that one just sitting right here in front of me. I mean, obviously the 450 level, just because you kind of got that nice, psychological number. So that's definitely something to watch. And then, probably the lows of today, around the 446 area would also be a potential red flag.
All right. And then that name that you took off the table today is Disney. You had some Disney calls there, looking for that little bounce towards 84. Got some of that price action there. This is the third day in a row it's been up. Got up to, where to get up to 84.67 before reversing back and giving up a little bit of those gains. Tested a 20-day moving average. So, what did you see in Disney that you liked? Any particular reason why you stayed such a short time in the trade?
Yeah, so got interested in this when the charter news came out. I mean, Disney is just it's a pretty oversold name. I mean, not too extreme, but it was hitting that 30 level on the RSI. So right there on the oversold. So I was kind of watching it for maybe a little bit of an oversold bounce anyway. And then the charter news came out, and I've played Disney a couple times in the past when it's had some news like that come out, and it's tended to have a pretty good run, especially being so beat up. So took a shot at it yesterday, and then we got the nice initial pop, and then the actual announcement came out and became a quick sell the news, but I still thought it had potential as an oversold bounce to test that 20-day, like you mentioned. And then today it just, it started to approach that 85 level, made a real nice move up. And then, we kind of I started to see more red on my watch list. So I was getting a little bit nervous about a pullback and reaching that 85 level. And I saw a real nice pullback. I mean, I could have jumped in later in the day, but blue chips aren't always my favorite to trade, as I've talked about. So once I kind of had my win on Disney, I kind of just took it off my list for the day. But you'd imagine this stock, if it can kind of start working its way above that 20-day and maybe the 85 level, that it would probably make a move up to the 50-day, you'd think.
Yeah, definitely. That would have to be on the radar. I guess you got some of that resistance from late August, right? In that August 17th to 24 range, from 86 to 87 before you get just before you get there. But yeah, that would definitely be the target level I'd have too. So we'll keep an eye out on that. Um, and see, how it treats around this 20. There's a lot of stocks out there on that 20 and 50-day moving average. Out of curiosity, Brandon, how do you follow those 20 and 50 days in terms of tells? Is there anything out of the ordinary that you do, or are you pretty much in line in terms of just kind of using them as a sentiment gauge?
Yeah, I love to kind of watch the direction in which they're curving. So that's one thing, and the main one for me, I mean, the 50 is obviously a very key moving average that I use every day, but the main one for me is the 20. If a stock's above the 20, then it's in theory going to see some more buying pressure, and if it's below the 20, in theory it's going to see more selling pressure. So I always like to try to be mindful of that in my daily analysis.
All right, so we'll continue to monitor that. Now, we did have a specific topic today, and you're going to talk a little bit more about the roles that you do on your options. I know a lot of feedback on that, asking why some people aren't as a fan of doing it, but you've got some pretty good reasons on why you kind of attack it, options trading that way, and I've had really good success in attacking option trading that way. So today's talk for the options playbook is really going to be centered around that. And Brandon's going to delve deeper into his discussion, kind of explain some of the reasoning behind it, talk about some of the management of that position and how that impacts your potential costs, and why he feels that the risk is greater than the reward on that front. So, Brandon, why don't you break down a little bit? I'll probably be peppering you with questions on this. Obviously, if anybody out there has some questions, because Brandon's doing this a lot with these trades, and I know some of you aren't certain about it. So, definitely feel free to pepper us with questions here. I'll pass it along to Brandon. I'll try to do a good job at staying on top of it. But Brandon, let me clear the floor for you and start the lesson.
Yeah. So, again, I probably should have talked about this a little bit earlier. So my apologies, because I know that there were some questions, and, I know that this is kind of a new idea for some. And, like you said, preface this from the beginning. Yeah, everybody's got their own trading style. There's a lot of things that I just don't do as a trader, and there's a lot of things that I do as a trader. And I have my style, and everybody does. I learned from somebody who rolled options on a regular basis, and he was very good at it. And he had a lot of very, very good reasons behind it. I know that a lot of traders do it as a trade and a risk management tool. So, if it's not for you, that's how you trade. It's just something that I like to do. And the reason that I like to do it is, if you roll options, you have a lot of potential benefits to them. You can lock in your profits. You can reduce your risk in a trade. For me, the deeper in the money an option goes, the more it's going to trade like a stock. So, holding an option like a stock is a strategy that's used by a lot of traders. But, for me, it's just not what I do. I'm trying to more play, breakouts. So I don't want to necessarily be holding on to an option like a stock. So, if something's, approaching in the money or sitting on a lot of profits, I like to roll to manage that trade. And, I think if you've been doing options long enough, there are plenty of times where you're sitting on a lot of gains. I mean, I don't know, perfect case right now. I mean, if you look at, we just looked like we were going in for a potential breakout in the market, and at 130, look at the candles on that intraday. I mean, all of a sudden that big gain that we just had, between like a little after 1 o'clock has just been wiped out. So, if you're sitting on options and, again, you can just close them out if you want to get out of the trade. But if you want to stick with a trade and you're sitting on a bunch of profits, rolling is a way to manage that trade. So just basics on what an actual roll is. And I had this question from a subscriber in the past, so I'll just repeat it. So, when you roll your calls to the next higher level, you're buying the same number of calls at a cheaper price, and you keep the difference. And The answer is yes, that's correct. So I'm just going to use examples. These aren't actual numbers of what the options are trading at right now, but let's just say, for example, you had 10 contracts of the Meta 310 calls, and you paid $3 a piece for those. And you wanted to roll up to the 315 strike, and they were $2. So you would simultaneously sell the 310 call and buy the 315 call. And that would give you a net credit of $1 per contract, or $1,000 that would then be put back into your account. And then you would keep the 10 contracts of the higher strike price. So in this case, I had just mentioned that rolling to the next higher level, although it is common, you don't actually have to do that. You can move up or as down as many strikes if you want. So if you were feeling very, very bullish on a particular breakout and you were going to roll something, you don't have to go to the next strike up. You can go several up, and sometimes I will do that. Maybe especially on a higher price stock like a NVDA. If you looked at NVIDIA right now, it's at almost 452, a couple ticks up, and you could be at the 455 strike in no time. So in a case like that, I might skip over a couple of strikes here and there. But that's just the overall, basics on how rolling an option works.
So, again, when you're looking at that next level to roll to, because I think that's obviously an important concept. Obviously, pricing's got to factor in. Are you looking at volume as well too, or are you just simply looking at charts in terms of open interest and things like that?
Generally for me, it always starts with the charts. Like we are just kind of talking about with like the 50-day or the 20-day. If I'm playing a potential breakout, let's go back to like Disney. Let's say Disney all of a sudden was, at the 20-day around 85, and let's just change the numbers here, and let's say the 50-day was up at 86. I'd probably be more drawn to that strike, just because that would be a next kind of logical target price for the stock. So I look at the charts first, and then from there, when making a decision, yes, I will look at the particular activity. If you're trading something like a LULU, that's probably a good example. That's going to be going to be thinly traded versus like a NVIDIA. So if you look at LULU, you've got the 400 strike at like 442 contracts traded today, the 402.5, 104, and then the 405, you got 636. So in a case like that, the 405 would probably play a factor for me, just because of the difference in volume. If you're talking something like a NVIDIA or a Meta, you're going to find some pretty good volume across most of the strikes.
Yeah, most of the names you trade, I would think, fall into that realm, right? Is that also by design too, I assume?
That is correct. Yeah. And, I try to, especially if I'm throwing out ideas, because I know that, some people are new to options. I try to find things that are going to be a little bit on the heavier traded side. Sometimes something like a LULU that has a little less action on the options chain catches my attention, and, I don't want to pass it up. But yeah, I definitely try to go where there's some decent volume.
Let me ask you this. Does the time decay play a factor too when you get closer to Thursday or Friday? Are you less likely to roll and just kind of hold in the money, or how does that impact your thought process on this?
Yeah, so I would be a little bit more likely to hold in the money versus rolling, especially towards the end of the week. Or if I were to get a case where, let's say like I'm in a trade on Meta, and I had like the Meta 300 calls, and let's say we had a 50-day moving average that was at 301. And again, I'm just making some of this stuff up for illustration purposes. You would think if it got over 300 that it would test that 50-day at 301 at that point. But then I might say, well, I think there's going to be some resistance there because it's a key moving average. So I might not want to roll up to the 302.5, but at the same time, I think I can maybe squeeze a little bit more out of that 300. So that would be a time that I would, potentially hold. One other time that might come up is, sometimes if you do some of these options that are a little more thinly traded, sometimes if you look up the option chain, there's just no volume on some of these. So that sometimes plays a factor too, where I might hold on to something.
All right. How about if you grab onto a trade and you feel like you've hit a pretty good winner here. You just see the trade's moving in your favor. You're already in the money. Now you're looking to kind of roll that over, and you really feel like you got some nice momentum behind you. How does that impact your decision on the roll?
Yeah. So, I mean, that's kind of the option trader dream right there, right? The guy that I learned from, I'll tell you, when we got some of these trend weeks, he would start out and at the time, when I was learning, Amazon was trading at 2000 or whatever. He'd start his week sometimes in the Amazon 2000 calls, and he would end up, being in the Amazon 2400 or whatever at the end of the week, because they just were strong and he wanted to stay with that stock, but he also wanted to protect his gains overnight. So if I'm playing a breakout and things are looking strong, then that's 100% a factor of why I would want to roll. And the reason that I would want to is, just generally speaking, the way that options pricing works is an in the money option is going to move less than an out of the money option if you get a good move on the stock. So, a good example would actually be that LULU trade. So I usually roll my options prior to them getting into the money if I think there's strength behind the stock. So, for example, Lulu got up to around 398 and I was in the 400s and I was sitting on some pretty nice gains. So I was anticipating that to, at least test 400 and then potentially even break out above that. So I wanted to roll that to the 405 to lock in my gains. And then also, because if I got that breakout, my returns are going to be higher on the 405 than the 400 because they are out of the money. Now, on the flip side, the thing that I also like about using or rolling options is, let's say I'm wrong. And unfortunately, I was. It had a fade when it hit 400. Due to the fact that I have rolled that option, I have at least protected some of my profits before that stock pulls back. So, when I'm wrong, and as traders, we are wrong. I wish I was right all the time, but it'd be impossible. At least when you're wrong, you have protected yourself with your profits a little bit, and you have taken some of that, money or original capital off the table.
So you're basically looking to press yourself while also protecting risk to the downside, and that's why you're of the opinion that you'd rather pocket any profits that you've made when rolling rather than buying additional contracts.
Yes, that's correct.
That's a risk management scenario more than anything else, right?
Correct. For me, I know that some traders do it and they do well at it and they love it. I always get a little nervous playing the game of buying more contracts. And I think that's probably a lingering thing. And I think I talked about this on the very first call I did with you guys when Jim was interviewing me. You get those cases too where, and obviously you're going to roll your winners, not your losers. But, with options trading, I think, get that mentality where you can easily load up on contracts and that can quickly adjust your basis, whether for better or for worse. So for me, I think I have some lingering days of trying to really lower my cost basis that really didn't end up working out. So I tend to not add contracts. If I were to do anything, if I was like, all right, Lululemon, this thing is just going to absolutely soar above 400, and I was in the 400 call and it got to like the 398 level, I would go and buy the 405s, because literally one tick up on a stock like Lulu and you could be going from 398 to 400 and you're already in the money. And again, if you're anticipating a true breakout, you're going to make more money off of the 405 than the 400 call.
All right. Now, one of the feedbacks that you've gotten a little bit more frequently on this is people are concerned about the costs, but you're certainly of the mindset that the benefits could outweigh that. So, you want to explain your thinking on that?
Yeah, so costs. Yeah, and I'll fully admit I don't pay attention to cost a ton. Obviously, I'm not trying to go out and make 100 trades a day to raise those costs. I try to be mindful of that, but at the end of the day, if I see a trade that I want to take, I'm going to pay the price that the broker is going to charge. I'm not going to walk away from it. And again, just a personal thought, just to give a little background on how I think, but. So costs on rolling. So obviously you've got your selling of one contract and the buying of another. So let's just say that I had 10 contracts, and obviously this is going to be different per everybody's broker. So take some of these numbers with a little bit of a grain of salt. But if I had 10 contracts, it would cost me about $13 to roll that entire thing. So if I'm up 100% on a trade, or let's just say, $1,000, which would be kind of a normal trade for me anyway, because again, I don't go huge on my options trades. If I'm up $1,000, paying $13 to really properly manage and protect that trade, that's just something I'm going to do. I'm going to do it each and every day, because like I've said, before, if all of a sudden the market turned on me, or, I've said this before, I've had cases where, I've stepped away for 2 seconds to grab a cup of coffee and I came back to a headline of, Trump tweeting that he was going to shut down trade with all of China. And like the market just totally tanked one of the first times he did that. And I lost 100% return in 2 seconds. So, if I had rolled that, I would have at least protected myself. And paying, $13 to protect $1,000 in profit, it's just something that I'm personally going to do.
All right. Now, we've speaking of roll, we've gotten a rollover in the market here. Sorry, I was paying a little too much attention to the conversation and not enough to the markets. We're back down to that 45.22 level. But bigger scheme of things, Brandon, this is kind of right in that level that we've been trading in and chopping in between for most of the day, right? So, I mean, out of curiosity, quick read on the markets from you. You got any thoughts on this?
Yeah, I mean, my underlying theme, and again, you got to be careful with this particular thought, because you never know. But I just feel like they're accumulating underneath the surface, and I feel like every time we've had some of these drops, we're starting to see more and more of those candles that have the longer wicks, showing some signs of some buying. I feel like some of the times that they've brought us down, it's been trying to create a little bit of panic to try to kick some positions out. So, I'm kind of the mind frame that they're kind of buying underneath the surface. So I'm not going to be shocked. And again, I kind of have one eye on this and one eye, talking about rolling right now. So take my thoughts with a little grain of salt, but I don't know. I wouldn't be surprised if we start marching back up here from quick glance.
Yeah, yes, we'll keep an eye out on that. Definitely a little bit of volume associated with that roll, but it's funny, we had that one big pop, didn't go anywhere, and then that roll over, and just feels like momentum uh, chopped down. So I'd agree with you too on that accumulation. Certainly seeing some signs of that underneath the surface. It feels like September, of course, will be pretty. It's historically a difficult month. We've got CPI, but for me, when you're looking at this, I just see this as weak longs that are easily shaken out and leading to some more momentum down. So we'll keep an eye out on these markets just in case they start moving again. But we are back to that 45.22 level. All right. So back to our rolling discussion, Brandon. Now you've talked a lot about rolling the strikes and everything. Haven't seen you roll the options expiration dates too much. So is that something that you just don't like to do, or is that something you do and I'm just missing it? Or when you're rolling, is it purely strictly on just strike prices?
Yeah, so the reason that you don't necessarily see that from me a ton is I just don't carry risk over the weekend very often. Every once in a while, I might get just something that I really can't resist, but for the most part, I'm heading into the weekend flat. So that's why you wouldn't see that from me. But I'm glad that you did bring that up because you will read about this a lot if you do the research on rolling. And there are a lot of traders that will roll out their expiration date as their contract gets closer to the actual expiration. And again, this is one of the things that you hear a lot about when we come up to a big options expiration, like a quad witching day or something. That's when you have all of these, big institutions and market makers and everybody out there that have all of these contracts coming up, and they either need to, have them assigned to them, they need to close them out, or they need to roll them. So, that's why we kind of keep hearing about, the 2-3 trillion dollars or whatever it is, worth of notional value contracts that need to be adjusted on options expiration. So it's something you'll commonly, hear about. It's just not something I do because of the, minimal risk over the weekend.
Okay. I think we've touched on everything in your notes. Am I missing anything here? I did have a couple other, I did have an additional question for you.
The last one is just talking about rolling a trade for overnight purposes. So, one of the things that I like to do is, if you're sitting on gains and you're heading into the close and you want to stay with a trade, Lulu is a great example. That had a post earnings release flag set up that I liked. I thought it could have some potential continuation. I wanted to stay with the trade in case, we got any sort of gap up in the morning, but I'm sitting on gains. So, I don't want to carry 50, 60, 70% of gains on options overnight necessarily. So one of the things that you can do is you can roll that option again to take some of the original capital off of the table and to lock in some of your gains. And again, we've all probably dealt with it. Overnight, these, especially in the choppy days, it can maybe be a little more challenging to determine which direction the market's going to go. There's always the geopolitical overnight risk. There's news risk on individual securities. There's all of that. So anytime you take any sort of risk overnight, you're just taking that chance. So if you roll, you've at least protected some of that trade. And as I had mentioned earlier, if just the general idea with options pricing is, let's say you get a gap up on Lulu in the morning and it closes at 398 and it gaps up to 405, let's say. Well, your 405 call is going to perform better than your 400 call. So, again, if you've locked in that gain, taken some off of the table, and then you move up the strike, and then the price continues at the open in your favor, your options trades are just going to become, more profitable. And again, on the flip side, if all of a sudden it doesn't go your way, well, then you're in a higher strike, and later on down the road, the odds of that trade working out have diminished.
That makes total sense. All right. So I think that covers us on the rolling options trade. Again, anybody who's following Brandon's trades, I highly recommend you go back and listen to this because he does do this frequently, and it's always good to understand the mindset of why he's doing this. And he's laid out some pretty good reasons for it. Brandon, I did have an additional question for you, and that's obviously we got options expiration for the monthlies coming up on Friday as well. So I was just kind of curious if there was anything that you were seeing for this upcoming options expiration at all. Is this quad witching too?
Let's see. I always have to go and Google it. To be honest with you, um, yeah, I think it is now that you. Yeah, September 15.
Yeah.
Yeah, that's what a choppy market will do to your brain sometimes, turn it to mush. And that's interesting though that you say that. We haven't really seen too many headlines from some of the numbers coming out, have we? As far as
No.
quad witching, which is a bit strange, right? I mean, you usually get reports like a week or two in advance, don't you?
Yeah, I'll have to go back and see. Maybe I missed it coming in, but I'm usually able to get my hands on the Goldman note and stuff, which has some pretty good numbers, just talking about the notional values and everything.
Yeah,
I
that's
was just curious if you had seen anything, or as we're approaching that date, and obviously a lot going to be going on around that date too. When you're talking about the UAW strike, and you got ARM Holdings coming out, and CPI, of course. So China data too. So a lot on the table coming up around that quad, which it's going to make for an even uglier trading environment, I think.
Yeah, I would agree. And you're just kind of looking over the last couple of days as I do my nightly research and kind of looking at just some of the big tech names. The option volume, generally speaking, seems to be a little bit on the lighter side. Which I guess would make sense to not jump into a ton of options during choppiness because that's where they're going to kill your premium. So yeah, I mean, a little light on the options volume. And again, I don't have specific numbers. This is just me literally looking through all of the big names and looking at the activity for the day. So yeah, I mean, nothing jumping out at me. I would probably agree with you though, that with some of this choppiness that we've had and some of the headlines and inflation stuff coming up, I don't foresee the rest of the week being smooth sailing, and especially on Friday. Hopefully once we have that behind us, maybe next week we can get back to some decent trading.
Yeah, yeah, that'll be interesting to see. And then of course we're going into the quarter end and start coming up on earnings season. So there's a lot laid out in front of us, that's for sure. So we got to start getting closer towards the end of 2023. All right, Brandon. Anything else that we need to touch upon before we let you get going back to the desk?
No, I think that's it. We hit everything on the list. Again, I know that this has been a new topic for some. If there are any questions, I'd be happy to try to answer as many of them as possible. And hey, if we get enough, we could do a follow-up segment or something. But yeah, again, I would just I'd recommend trying to do some additional research out there. I mean, this is one topic that there's definitely quite a few different websites out there to learn about, and some of them are, which is nice, they're just kind of really basic. They just lay out the few reasons of why you should do this. I mean, it's kind of everything that I just touched upon, but there's some good resources out there, and if it's new to you and you're getting into options, I would just definitely recommend trying to think about it and run some test trades on what you're doing and kind of see what they would look like, and just consider putting it in your arsenal of risk management.
Yeah, no, all good stuff there, Brandon. And as per usual, We appreciate you taking the time to discuss that. I know a lot of people have been having some nice success with your trades, so getting a better understanding, especially since you've been really doing really well with that rolling on why you do it. I think it's very helpful for the trade for the subscribers out there. So appreciate you taking the time and running through that, and we'll definitely continue to follow along here, and look forward to our next discussion on the options playbook.
All right, sounds good. Well, as always, Gavin, I appreciate the time today.
No problem at all. We'll talk to you soon. As for everybody else, we are going to be just shutting down streaming momentarily here and restarting it up in a couple minutes. So give us 2 seconds.